If you observe the history of Indian stock market carefully, one thing you will notice that the biggest wealth in every decade is usually created by few structural themes. In the 90s and early 2000s, private banks created a massive wealth for investors as India's financial system evolved. Then came the IT boom, where companies benefited from global outsourcing and digital transformation. After that, consumption became a long-term wealth creation theme as rising income level changed spending pattern across the country. And if you observe carefully, every investor in these themes created extraordinary wealth because they identified the structural trend early and stayed invested for a long period. Now the challenge is identifying the next decadal wealth creation opportunity is never easy because when a theme is still in early stages, there's always uncertainty. Valuations looks expensive, earning visibility looks low, and many companies within the sector fail to execute. That's why while the theme may eventually become huge, stock selection becomes extremely difficult. And honestly, this is where many investors struggle. Sometimes we identify the right theme but pick the wrong company. Sometimes management execution disappoint. Sometimes competition changes completely. And sometimes valuation becomes so expensive that even good businesses fail to generate strong return. So when it comes to individual stock picking, you need to spend time and effort in doing the research, tracking the company performance, quarterly result, tailwinds, headwinds, and so on. Obviously, if you are a salaried employee or a business owner, it becomes very difficult to track the market closely. That's where one of the best way to participate in emerging theme is via ETF or mutual fund route. Because through ETF, you're not betting on one company alone. You are participating in an entire structural opportunity. And that brings us to the most important question. What could be the next structural themes in India that can potentially create wealth over the next decade? So in this video, I want to discuss 3 themes where you can potentially do SIP through ETF for long-term wealth creation. The idea here is not short-term trading or momentum investing. Please note that. The idea is to participate in structural trend that can benefit from India's long-term growth story over the next 10-15 years. Alright, let's get started. So if there is one theme that can potentially become a massive decadal wealth creation opportunity in India, it is healthcare. And the reason is simple. Healthcare demand is structural in nature. Unlike many sectors that depend heavily on economic cycles, healthcare eventually keeps growing because it is linked to population growth, rising income level, increasing life expectancy, lifestyle disease, and insurance penetration. Just look at India today. India has one of the largest population in the world. But healthcare infrastructure is still underpenetrated. Hospital beds per capita are low, doctor availability is low, diagnostic penetration is evolving, health insurance penetration remains significantly below developed economies. So structurally, India is still in early stages of healthcare expansion. As income level rises, people naturally spend more on better hospitals, diagnostics, preventive healthcare, chronic disease treatment, branded medicine, and health insurance. This is exactly what happened in every major economy that has become developed during their growth phase. Another important factor is lifestyle diseases. Urbanization and changing lifestyle are leading to a sharp increase in diabetes, cardiac disease, obesity, cancer, and stress-related illness. Unfortunately, this means healthcare demand can continue to compound structurally for many years. The next major growth driver is health insurance penetration. As more people get insured, affordability of treatment improves dramatically. This directly benefits the entire healthcare ecosystem, including your hospitals, diagnostic, pharma companies, device manufacturers, and even insurance players. Also, India is emerging as a global healthcare and pharma hub. Indian pharmaceutical industry already played a major role in generic medicine and vaccines globally. And now the opportunities are expanding into your complex generics, CDMO, then biologics, specialty medicine, and global manufacturing outsourcing. At the same time, hospital chains and diagnostic companies are witnessing strong growth because healthcare formalization is increasing. Organized healthcare players are gradually gaining market share from unorganized segment. And the interesting thing about healthcare is it is not dependent on one single subsector. Within healthcare ecosystem itself, you have multiple long-term growth engines. You have hospitals, diagnostic companies, pharma companies, insurance, medical device companies, wellness, and contract manufacturing companies. This is why healthcare becomes an interesting long-term ETF theme. Because instead of trying to predict which one company will dominate over the next 10 years, a healthcare ETF allows investors to participate in the broader structural growth of the entire sector via SIP mode. To participate in this theme, you have Nifty Healthcare Index. Some of the ETFs that invest in these themes are from Aditya Birla, Axis, DSP and ICICI. Within this, I would suggest exploring ICICI Healthcare ETF. This fund has expense ratio of 0.15 with tracking error of 0.04%. And since it's replicate the Nifty Healthcare Index, the portfolio construct is also similar with 20 stocks across pharma and hospital space. By the way, this information I'm using is from Angel One. One thing I like about Angel One platform is it makes ETF discovery quite simple because you can explore ETF category wise and compare different themes easily. More importantly, Angel One also allows SIP in ETF, which is great feature for long-term investor. If you have any doubt, you can also ask their AI-powered tool, Ask Angel. Then second theme with immense growth potential is financialization of saving. And within this, capital market theme can potentially become a massive decadal wealth creation opportunity. Try to understand this. For decades, Indians have invested in real estate, gold, fixed deposit, and physical asset. But over the last few years, that behavior has started changing. More and more people are now participating in equities, SIPs, mutual funds, ETF, trading platform, and wealth management product. Just look at the growth in Demat accounts, SIP inflows, retail participation, and mutual fund AUMs in India. Even after market correction, domestic participation continued to remain strong. And the interesting thing is, India is still in very early stage compared to developed market. A large percentage of household saving in India is still parked in traditional assets. So even a gradual shift of saving towards financial asset can create enormous long-term opportunities for the entire capital market ecosystem. Now, when we talk about capital market theme, there's a massive ecosystem that includes stock exchanges like BSE, NSE, MCX, then brokers like Angel One, Grow, then asset management companies like HDFC, Nippon, ICICI, Aditya Birla Sun Life, then wealth management platform like Nuvama, Motilal Oswal, Anand Rathi, 361, then depositories like CDSL, NSDL, and market infrastructure businesses like CAMS, KFintech, Edelweiss, JM Financials. So as participation rises, all these businesses benefit structurally. Another major driver is digitization. Investing today has become extremely simpler compared to 10-15 years ago. Today, a person sitting in a small town can open a Demat account within minutes and start SIP directly through mobile app. This democratization of investing is a massive long-term structural trend. Then India is also witnessing a generational shift in investing behavior. Young investors today are increasingly preferring equities and SIP-based investing over traditional saving products. Of course, capital market businesses are not risk-free. If market remain weak for a long period, then investor sentiment and trading activity can slow temporarily. That's what we have seen in last 18-20 months. So revenue of capital market companies are also linked to market volume and sentiment. So this theme would remain volatile. But structurally, capital market ecosystem can potentially become one of the biggest beneficiary of India's growth story. To participate in this theme, you have Nifty Capital Market Index. At the moment, I could only find two ETF replicating Nifty Capital Market Index. First is Grow Capital Market ETF, that is an expense ratio of 0.7%. Its top three constituents include MCX, BSE and HDFC AMC, followed with 361, CDSL, Angel One and so on. Second option is Motilal Oswal Capital Market ETF. It has relatively higher expense ratio versus Grow Capital Market ETF, and since it also replicates Nifty Capital Market Index, the stock constituent and their weightage is almost similar. Then third theme with long-term wealth creation opportunity is defense. Now defense has quietly evolved from being a cyclical PSU driven sector into one of the biggest long-term structural theme in India. And the reason is simple. For decades, India depended heavily on import for defense equipment. Whether it was fighter aircraft, missile, electronics, engines, radar, advanced system, a large portion came from foreign countries. But now the mindset has changed completely. Today, Ministry of Defense has placed strict import bans on thousands of items, right from simple component to complex line replacement units, radars, naval system and so on. And government is aggressively pushing for indigenization, import substitute, then domestic manufacturing and exports. In fact, in latest budget, around 75% of modernization and capital procurement budget is marked specifically for domestic procurement. And this is where the long-term opportunity starts emerging, because defense is not a one-year story. Defense programs usually run for 10 years, 15 years, sometimes even decades. Then another important factor is geopolitical uncertainty. If you look at globally, almost every major country today is increasing defense spending because the world has become significantly more unstable. Russia-Ukraine conflict, Middle East tension, China-Taiwan concern, border security issues, cyber warfare, drone warfare, supply chain security concern, and so on. And because India is one of the largest defense markets globally, even gradual localization creates an enormous opportunity for domestic companies. Then second big reason why defense has become a structural wealth creation theme is entry barrier. This is not a sector where new competitors can enter easily. Defense companies require years of approval, certification, manufacturing capabilities, technology partnership, execution track record, and government relationship. That naturally limits the competition. Now there's another very important shift happening. Earlier, defense was dominated mainly by PSU companies. But now, private sector participation is increasingly rapidly across your aerospace, drones, electronics, missile, naval system, precision engineering, and advanced manufacturing. So the overall ecosystem itself is becoming much broader. On top of this, there's a big opportunity in export. If India successfully becomes a global defense manufacturing hub over the next decade, the opportunity size can become much larger than what most investors currently estimate. And this is exactly why defense has become one of the biggest long-term themes for wealth creation in India. Because it's a combination of government policy, manufacturing push, geopolitical necessity, technology development, localization, and export opportunity. Now, while defense looks like a very powerful long-term structural theme, you also need to understand the risk carefully. Because one of the biggest mistakes people make in market is assuming that a strong theme automatically means every stock will keep going up forever. So first major risk is valuation. Today, many defense stocks are trading at extremely premium valuation because market has already discounted several years of future growth. So even if companies continue to grow, stock return may slow down if expectation become too aggressive. Then second risk is execution delay. Defense projects are large, complex, and heavily dependent on government procurement cycle. Order announcement may happen today, but actual execution and revenue recognition can take years. Sometimes projects get delayed due to approval, budget allocation changes, testing delay, or geopolitical factor. Then third, defense business can become extremely sentiment driven. Whenever geopolitical tension rises, defense stocks often see sharp rally. But sentiment driven sectors can also witness sharp correction when enthusiasm cools down. So volatility can remain high. Another important risk is concentration risk. Many defense companies today depend heavily on a few orders or government clients. So earning visibility can sometimes fluctuate significantly depending on project execution. And finally, since the entire sector has become market favorite, expectations are now very high. That means companies need to continuously deliver strong execution to justify the current valuation. And this is exactly why for long-term investor, SIP investing can make more sense in a defense ETF rather than trying to aggressively time the market. To participate in this theme, you have Nifty India Defense Index. Again, there are limited ETF at the moment to invest in this index. First is Motilal Oswal Defense Fund and second is Growth Defense Fund. This ETF includes 19 stocks and its top 3 holdings include HOL, BEL and Bharat Forge, followed with Solar Industry, Mazgan Dock and so on. So if we quickly conclude, 3 themes that can create wealth for investors are healthcare, defense and capital market. Healthcare benefits from rising income, insurance penetration and chronic disease trend. Capital market are powered by gradual shift of household saving from physical asset to financial asset. Defense is being shaped by indigenization, government policy and rising geopolitical uncertainty. All 3 themes will go through cycles, volatility and periods of underperformance. But historically, wealth in such sector is not created by timing. It is created by staying invested in the broader trend. And ETF offer a simple way to participate in these structural stories without betting on individual winner. Now you tell me in the comment which theme you find most promising among the 3. And if you find this video useful, do share it within your circle. I'll see you in the next video. Till then, take care.